Ujjivan Small Finance Bank. Let's understand what the outlook is and the rationale behind the revised guidance. Remember, they have lowered their growth for FY25. And Davis, the MD and CEO at Ujjivan Small Finance Bank, now joining in. Thank you so much for taking time out. I think we'll get straight to it. You've cut the loan growth guidance for FY25. And if we understand correctly, that's largely on the back of the concerns in the MFI segment. Can you just clarify and elaborate as to what is the reason for the same?
Yeah, good morning and good to be with ET. Yes, we have revised the guidelines and the guidance on Friday. And that is, as you rightly said, primarily due to the microfinance portfolio and the stress that we have seen in pockets across the country. And we feel that, that stress will prevail for part of this year. And therefore, the credit cost has been moved up to 1.7% from a higher range of 1.5. And as a result of that, we also have, put in place during COVID a very, responsive team on the ground. And based on the feedback that we got, granular feedback from the ground, we have taken this decision to go slow in certain pockets and, to watch carefully the pockets in the country which have been affected. And, that is the reason why we have in turn had to lower the growth guidance. But all in all, I think, it is something that in this business, it happens from time to time. We are well positioned to handle this situation. And our response, being done quickly is one of the important, guidelines that we have shown that we are aware of this. We are well entrenched in this business, and our ability to react is very important.
How shallow could this be? Because can you just delve a little more in detail this stress that you're observing in certain pockets? Does it appear containable by lowering growth? Could it be steep or could it be shallow? Can you just talk a little more? When you say it could prevail some part of the full year, how long is your estimate?
Now, the thing is that as far as Ujjivan is concerned, we are present in 26 states. And our portfolio is, divided there, and we have in certain places it's slightly higher, other places it's lower. But this distribution in 26 states has a certain advantage. Now, for us, we have noticed this in different parts of the country, and as we said in our, outlook and in the analyst meet, we have seen it in southern Tamil Nadu, in Kerala, and then in the north we have seen it in Punjab and Haryana, and also in the west in Gujarat. Now, there are different reasons. Some of it is overlending, some of it is politically driven. So we have to handle each of these based on the circumstances. And I think, as we go towards the second quarter of the year, we will see some of the political driven issues may sort of take care of itself and, come out of it, in which case, Haryana and Punjab will see much bigger change in terms of the situation. But where there is overlending, it may take a bit longer. And, in those areas, we definitely have to be careful and slow down a little bit. But again, it's not, for example, in Tamil Nadu, it's not the whole state. It's the southern part of Tamil Nadu where we are seeing stress, but the northern part of Tamil Nadu is doing okay. So I think, these are things that we have to monitor very carefully. And hopefully, once the budget is out and announced and the revenues trickle into the economy, I think we will see some benefits from that. So all in all, we are looking at a better second half. The effect is more in the first half of the year.
Expecting a better second half, and thank you, Mr. Davis, for being candid about the kind of stress that you're seeing in the system. But just wanted to, ask you a two-part question. One, with respect to all of these loan waivers which have been announced in Telangana, there's a risk in Punjab, Haryana, Maharashtra, etc. as well. How does it impact business? And secondly, you had also raised your credit cost guidance. Could you elaborate a bit on that as well?
Yeah, the credit cost guidance has moved from 1.5 to 1.7. Now, I think, we have also seen the CRIF report which came out, and we position ourselves against that report and see how it is. And we see we are much lower. Our credit cost based on that is 0.8. It was 1.6 in terms of 1.7 in terms of the industry which was given by CRIF. So there again, we have contained. But I think the issue is in each of these states, different aspects are playing out. Now, some of it is rural driven, some of it is agri driven. So I think that aspect, any of the institutions which are very much exposed in those areas will have to, be a little careful. And I think, the industry recognizes that, and it is something that everybody has to take into consideration. Now, fortunately, in some of the states you mentioned, Ujjivan does not have any big agri portfolio or rural portfolio. It's more in the urban and semi-urban area. And to that extent, we are well off in those locations. But all said and done, I mean, we are coming and, making this guidance upfront because we gave a different guidance a few days ago. We did this granular study. And most important is that, the guidance which we are given still shows that our collections and our, other aspects of the business are much better than others in the industry, even at the higher guidance rate. So I think, people have to understand where we are coming from. And being the first out with sort of revised guidance doesn't mean that, things are not looking good. It's not as good as what we thought it would be, but I believe, the numbers which we are still talking about are fairly good numbers for the year.
Good numbers for the year, but just wanted to change tracks and talk about universal banking, because the kind of numbers that you have in terms of parameters looks like you're very close to the road of eligibility. Is that something that you see happening for yourself very soon in a matter of, let's say, 12-18 months?
Yeah, based on the current guidelines which were given by RBI in April, Ujjivan is one of two banks who are eligible to apply because we meet all those conditions. So definitely, during this financial year, the board will take a decision on whether to go forward or not. And I think, if we decide to go forward, we have a good chance of getting to the RBI and getting their blessing on this one.
Sure, and you've also highlighted your plans to focus on vehicle finance and gold loans. How much are you anticipating in terms of what these segments could potentially contribute to your total loan book?
Yeah, you see, we have put a target of 40% secured lending by financial year 26. So right now we are about 30%. We hope to get to 34, 35 by the end of this financial year 25, and then in the next financial year 26 get to 40. The biggest contribution to the secured will be the home loan and the home loan portfolio, followed by the MSME. But the gold loan and vehicle finance are starting from a very low base right now. So they will grow rapidly in terms of growth. But in total contribution, they will still be a little on the lower side, even by 26. But eventually, we see vehicle finance definitely, contributing between 7 to 10% at some point in time during our growth patterns.
The outlook then when it comes to affordable housing, because it's been highlighted that it has the potential to grow 50%. At a macro level, what kind of growth are you expecting for this segment? I understand it's about 17% of the total loan book. Will that portion increase to say 20%?
Absolutely, you're right. I think by end of this year, we are hoping that, the affordable housing along with micro mortgages will be around 20%. And that is going to be a major contributor in our secured loan growth. And, we are seeing what we have done is we went back to the drawing board last year. We rejigged this business and we have relaunched it last year. And that is really paying off because we have set up asset centers in 18 locations in the country. And those asset centers are really hubs of activity where the business, the credit, the legal, and the operational team sit in one location and are able to respond very quickly. So our turnaround times have reduced dramatically, and that has attracted new customers of the type of quality that we want. So I think we have done that also this year for the MSME business and relaunched it. And we are hoping that in the second half of the year, that business will also take off like housing did last year. So all in all, our secured businesses are moving in the right direction.
Okay, Mr. Davis, on that note, we let you go. In fact, I think this would be our last conversation, sir, as the MD and CEO, because you've been with the bank since 2018, but it looks like Mr. Sanjeev is going to take over from July 1st, right?
Yeah, absolutely. Mr. Sanjeev Notial will be taking over. Very experienced banker, and I think he's the right person to take Ujjivan to the next step and possibly a universal bank license.
What next for you, sir, then?
I will, be doing a couple of advisory roles, but yeah, I'm looking forward. I'm not fully hanging up my boots yet, but doing a little bit more in the industry, but not from the current role position. Slightly different.
And you shouldn't hang up your boots anytime soon. We would love to chat with you more in your other roles. But thanks so much for making time and speaking with us. And congratulations on the kind of run that you have had at Ujjivan Small Finance Bank.
Thank you.
Okay, on that note, we'll slip into a very short break. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.